said, would you ever think of making TV a full-time thing? And I did, and I loved it. And that's where, I got to meet you, Jeff, and Eugene, and I think John, we had some interactions there, and I loved it, but I really missed picking stocks and being in the market. So launched Bullseye Brief about 5 years ago. As I say, American ingenuity, that's my thing. I've been very fortunate beating the market significantly. It's one stock pick per week. And I just absolutely love what I do.
John Markman.
First.
I guess I went out of alphabetical order. I just looked left. John and I have known each other for a bunch of years. Got at least 20 or so, maybe more. And
more like 25 or 30.
And you've been picking stocks since the day I met you. So tell us where you're at now and all your involvements and what your angle is.
One of the scariest moments of my life was driving with your father in his Cadillac. I think you can relate to that.
He used to be a good driver back in the day, but yeah.
Yeah. I just close my eyes and hope for the best. So my name is John Markman. I am a former journalist. Worked for a long time for the Los Angeles Times, then became managing editor of MSN Money back in the turn of the century, which is like 1997. And after that, I went to start a hedge fund, did that for a couple of years, and then started my own research business. So currently I have 7 newsletters, 3 on stocks, a couple on options, and 1 on futures. And have an opportunity to, my greatest opportunity right now that I see is in the digital transformation of society, business, and entertainment, sort of like what Adam was talking about. So we're definitely into it. I think that digital transformation is the investment trend of our lifetimes, and something that I talk about in my newsletters and recommend a lot of stocks in that area. So I look forward to talking to you a little bit more about that today.
Thank you, John. And Gene, I think you're the only one that I've never really met personally. So you have been a tech investor for a long time. So let's hear your history a little bit.
Yeah, good news, Jeff, is that in the accelerated digital transformation, meeting on Zoom counts. So we have officially met. Wonderful to do that. And I am been a longtime follower of tech. I was an equity analyst for a while. And then 4 years ago, along with a couple other people, started Loop. We are a multi-stage investment fund that is investing in transformative tech, a lot of the same themes that Adam and John talked about. And so we're really trying to capture where the world is going and focus on that frontier tech.
Excellent. Thank you guys for entertaining me and helping me out since I'm coming new to this. Pinch hitting for Keith. I'm trying to just think about where you think the future is, where you think the main driving technology is. You're looking at American ingenuity, Adam, digital transformation. Let's start with you, Gene, since you gave us your intro last. You're looking at electronic vehicles and autonomy and the digital transformation. So where do you see the kind of thing that I'm looking for in my super boom that's going to change the world? Is there anything out there that in particular really jumps out as something that's going to make everyone's life different all over the planet?
I think one of them is just around how people are going to move around. And we've seen some just wicked increases in valuation around this. This is around both passenger autonomy, EV, and eventually autonomy. And then kind of fast forward to beyond autonomy or beyond passenger vehicles is networks, where you will have progressively won't need to have a car. And think about your typical wait times with Lyft or Uber being 7 to 15 minutes. Imagine that being 1 minute, and with a driverless car. I'm thinking back to the Cadillac analogy a minute ago, and closing your eyes in vehicles, and that will be the future. And I just start there because I think that autonomy is going to be one of those most obvious areas over the next decade that we're going to look back and think that we just totally our world is very different, similar to how the smartphone has been an obvious change. In some ways, I want to start there because it is going to be so big, but I think that a lot of those companies their valuations have gone up. I think they can continue to move up, but I think kind of another factor, another wave of what we call this digital transformation, accelerated digital transformation, is going to be around healthcare and specifically moving the clinic into your home. And there's a lot to do around that. So those would be two areas that I would point out.
I think, if there is a benefit to this COVID pandemic thing, is what the last thing you just said, is that we've seen some digital transformation in medical treatment already. I mean, teletherapy is happening everywhere you go. I've been communicating with doctors for just regular stuff through their portals, and I know that's it's happening on the phone as well. I think if we can find some positive there, that might be it. John, anything along those lines that you want to jump on there? Is there a particular stock, Gene, that you might be able to share? No, that this is Money Show. People like stock picks, stock ideas. And you mentioned there's a couple of big caps. Maybe there's a name or two or a ticker that you might direct people's attention to that are working well in that area.
Yeah, well, I want to focus on one that I think is going to surprise people, and it is. I would first maybe need to start with is that we research. We do not give formal recommendations. So this is what I believe. It's not a investment recommendation per se, but I think that Apple has a massive upside here. I think in the next 2 years, I think the stock can be up 50%, 50. I'm basing that on what I see as part of this digital transformation, specifically people better equipping themselves at home with whether it's iPads or Macs, whether it's to learn or work from anywhere. And then there's another phase that kind of plays in where eventually we think that Apple in the next few years is going to start to offer more of their hardware as a subscription. And that should be good for the multiple. And then the last piece is trying to unearth what they're doing in auto. It's still a little bit opaque, but I started about the transformation in auto and autonomy. This is a multi-trillion-dollar. I don't like when people throw out big numbers, but it is a massive number. And I think that Apple is going to have some play on that in the years to come. And I think that's going to be positive, not only for earnings, but their multiple. And so I think it's the one that's very obvious. I continue to believe, and this is our top pick for Loop's top pick for FANG names. We do that every year for 2021.
Yeah, I just bought a new 12 Pro Max. My 7 Plus microphone died. So, and my sons left the Samsung platform and went over to Apple because it's easier to use. So,
and it's a whole ecosystem too.
Yeah.
Talk about easier to use.
And the watch, the wife has the watch. I mean, it's amazing how they've continued to. I mean, I'm not a Mac guy. I'm a PC guy because spreadsheets are too important. But in the whole design and production, the digital media world out there, it's definitely easier. A lot of people are using the Mac. Sorry, that was my phone just ringing there. Let's bring Markman in. What do you got, John? What are the things that are jumping out at you? And don't be shy about throwing a stock name out there.
Well, I think that people don't realize that the digital transformation has really been with us for the past 10 to 15 years and is only accelerating now. And in some ways, you don't even realize how many aspects of your former physical life have become digital and how much analog has become digital. So for instance, email is it's taken for granted now, but 15 years ago, we were still writing out letters and putting them in envelopes and getting stamps. And now it's just an absolutely baseline part of our lives to do email, and email that's really lives in the cloud, particularly the Google Cloud. So another example of the way digital transformation is already with us is Netflix. 15 years ago, we were happy to get the CDs in the mail, and everyone fought to have our family fought to have their favorite movie at the top of the queue. And now, there's no physical discs play, and Netflix comes up and we watch a movie. So that's another example of something that was previously analog has become digital. So I think there's a lot of plays still left in the market that people aren't really aware of that are going in the same direction. One of them is advertising. We talk about the connected TV. My favorite pick in this space is called the trade desk, TTD. Yes, it's expensive, but it really has monopoly on something that's extremely important. Most of the advertising on the web today is done on Google and Facebook, but for everything else, there's a programmatic methodology for determining ad pricing, and that's the trade desk. They're sort of the stock exchange of advertising, and they're already big. They're getting much bigger, and they have virtually a monopoly in their space. So I think people should take a look at that.
Trade desk. There was one that came through our basket. You know, Amdocs, DOX.
Yeah, the old Israeli company.
Is that the one? And then there was Avid Tech.
Oh yeah.
Is that something you know that one, Adam?
Yeah, it shows up on my screen for really high quality tech names, especially anytime there's been some volatility in the market and that one goes down, it just jumps right off the page.
It came through my fundamental screens. It's on our stock basket at the you know, the newsletter. So
yeah,
interesting. So what else you put out a bunch of stocks in this tech area, Adam. What's something that's really jumping at you lately that came through your screens?
Oh yeah, well, I mean, I tell you right now, I just printed out a bunch of reports here on a LiDAR company. I decided I need to get more involved in electric vehicles myself. So having sold my APTV too soon, and so I think LiDAR is very exciting. You talk about digitization.
What is LiDAR?
Pardon?
Explain LiDAR to those of us that.
Yeah. Okay. So LiDAR is light detection and ranging. LIDAR. LiDAR. Light detection and ranging. And basically, it does with laser beams what a radar does with radio waves, or what a sonar does with sound waves. And because it's light and light travels at the speed of light, it's significantly faster. It's incredibly accurate. So you can actually distinguish objects 1 centimeter, 100 yards out, and you can do it through fog. And, I recognize that Elon Musk has said that chasing LiDAR is a fool's option because it's too expensive. But there's a company that I'm going to write up. There are only 4. I'm going to write it up Sunday for my subscribers. That has actually brought the cost of some of these units down to $100. And so you can put 4 of these units on a car. And, to me, that's incredibly exciting. That's the, digitization of the steering wheel. We're also talking about healthcare, and there's a trend there that blows my, in fact, I think I call it the holy grail of healthcare. And it's real simple. It's helping people live longer at lower cost to providers. So people live longer, providers cost less, and that's all about digitization. I mean, think about Gene's beloved iWatch, right? And that thing is pumping out all kinds of data about your heart, as an example, and that gets sent up through 5G into the cloud, and your doctor then can track that. And not only does that create a baseline for your heart rate, but suddenly you're compared to a baseline of millions of other people with heart issues. A company that is doing that is Inovalon, INOV. I got my subscribers in. Admittedly, I got kind of lucky on the timing. I got guys in at 18 or 19 bucks.
Luck counts.
A few weeks ago, but I'll take luck. And the other thing's in the mid-20s. It got whacked down. This is so crazy. I'm so tired of these overreactive headlines. The company guided down by 2 percentage points, and the stock got whacked by 25%, at which point it said, okay, I'm writing this thing up. And then just yesterday, they guided back up. And so guess what the stock is doing? But the market is so unforgiving these days. So I try to trade against the noise of the market and embrace these big digitization trends that we're all talking about, whether it's the holy grail of healthcare, whether it's the, LiDAR teaching cars to steer, or, immuno-oncology teaching the body to fight cancer. I mean, it's just really cool what we're doing with data. And I think every company has not only become a tech company, but a data company and an AI company.
And everything's evidence-based results.
Adam, what was your bet on LiDAR?
On LiDAR?
Are you releasing that yet?
Well, okay.
Come on, man.
I'll tell you,
hold out on us.
Even though my subscribers don't get it until Sunday. Yeah, Velodyne, VLDR. It's 4 billion market cap. VLDR. I think it's the pick of all four. There are four of them. Luminar is the one that people know. That's a $10 billion market cap, but they only have like 10 million of revenues. This one is a $4 billion market cap with 200 million in revenues. They've got 175 pipelines in the project. They've partnered with every major company out there you've ever heard of, from Ford and GM to Honeywell to Uber, Google, on and on. And the guy who founded the company, David Hall, is effectively the godfather of LiDAR. So it's
What's
just
the ticker again, Adam?
Yeah, VLDR. Yeah. Velodyne is the company, VLDR. It's a crazy chart. It'll scare the heck out of you if you look at it. But I will also tell you, because there are probably some options traders listening right now, what I think I'm going to do is buy a little bit of stock, like a 1/3 position, and then I'm going to start writing some puts because it's like 150 vol. I mean, you know, the stock's at 23 and you're selling a March 20 or a March 17 put at $2. So, you know, you lower your cost basis to 21 and, you know,
that's the old way to do it. You know,
yeah.
better sell a put than buy a stock, right?
Yeah. Anyway, I've been talking too long. I don't want to be a ball hog.
Hey,
Adam, have you looked at Lumentum at all?
Oh yeah, I'm long Lumentum, and it just hit my target today, and I'm like, my target's probably too low, $110. I've been long this thing for quite a while. I absolutely love it, and I don't know. Do you think my target's too low, John?
Yeah, I do
raise
think
your target.
It depends on what your time frame is.
Yeah.
If your time frame is the rest of your life, then it's not too low.
Okay.
What about letting your winners ride, Adam?
Presumably,
So
presuming you're not going to die tomorrow.
here's the thing. I'm very disciplined. You know, the only time you're rational is before you buy a stock. And so I always set a target. And when it hits the target, I sell half. And, you know, I bought Lumentum, I don't know, whenever the heck it was, a year ago. And it's hit my target. I mean, you know, I've made a bundle on it. And so I have to honor my discipline and sell half.
Great discipline, Adam. I love that.
Thanks.
Hey, Gene, I mean, my son's nuts over Tesla. Do you have a take on that? I mean, that's the you know, mother of all EV vehicles companies right now. Is it really that great, or is it something to be concerned with?
I think that to take John, if you have a longer term view, I put it not the rest of your life, but a 3+ year, I would continue to own Tesla. If you have a 1-year time horizon, I would not own Tesla. And those may seem contradictory, but if I may, is that this is really tough to predict where the fence is on something with these open-ended opportunities. And you may have thought that the fence was at 400 or 600, and here we are above 800. And so it's tough to try to frame in where the fence is. What we do know is that there is these trends, especially something like EV, when you're getting a car, it takes longer than people think. Ultimately, it's going to be bigger than what people think. So what that means is there can be some fits and starts in terms of what the delivery numbers are, though they're going to grow them nicely. This year, the street's looking for about 60%, 57% growth. So it's a pretty high target. The rest of the auto industry, by the way, was down 5% in the December quarter. And so just massive outperformance. And that's a pretty high bar in a market where people make decisions months and years ahead of actually buying a car. And so that's the point that I want to start with, is just, this is one, you don't want to, people are buying Tesla in anticipation of the S&P introduction. They buy it in anticipation of a quarter. Please don't do that. I think if you're going to invest in Tesla, I think it is wise. And let me just get to why I think that longer term, this can be bigger than its current $800 billion market cap. Is it's not just about EVs. There's 80 million cars sold globally. That accounts to a $2 trillion market. But even beyond that, in transportation, this year we're going to hear more about their robotaxi fleet, about their full self-driving, and not to say that it's going to see mainstream adoption, but I think that's going to surprise people at how far along that is. These are all long-term themes, but Tesla's right there. And I think that ultimately they can have 20, 25% global car share. GM is the highest today in the high teens. And I think that Tesla is there. And you get some other, by the way, it's not over yet. I want to add a couple other benefits that Tesla's going to have in the years to come is They're going to get likely from the Biden administration some tax credits returned to the car that will lower it by about 10%. They have a solar business that will benefit from that as well, and that is still nascent today, 7% of sales. And so I think you put it all together, this is a great investment. It is not a story you'd want to trade.
Gene, I know you mentioned that the importance of fleets of autonomous cars, and then you talk about ownership of Teslas. Where do those two ideas collide? I mean, I'm in 7 years, am I going to be owning my own Tesla, or am I going to be subscribing to a Tesla fleet?
It's different for different people. I think that for most people, eventually it will be through a fleet, but there are use cases where you're still going to need a car. Like a great use case is if you've got kids under the age of 10, you really need a car. But those use cases kind of go away. But the advantage that Tesla has is they can play both sides of this. They can sell cars to people that have autonomous features. And then separately, you're going to see some grassroots businesses over the next few years start to pop up where mom and pop will purchase a dozen maybe Teslas and kind of put them into the Tesla network. And so I think the answer is, maybe I want to answer the question slightly different. If the average home today has just under 2 cars per household, I think that over time that goes down to 1.
Mm-hmm. And so taking a trip out to a baseball game for the kids in the next county, you take your own car. But for everything else, just going downtown or going to the store, you take the fleet.
Yeah, I think the fleet is going to be, progressively. And what needs to happen there is prices need to come down and availability needs to improve. And both of those are going to happen. The driver is a big part of the equation. People get tired. People make mistakes when they drive. Humans are wonderful drivers when they're focused, but unfortunately that it's rare that happens. And so I think that the fleet approach is something that's powerful. I think one of the reasons that Apple's trying to figure out their way forward with cars, I think they want to do the fleet. I think there's some concern from the top of Apple about cars, people losing their lives in an Apple car and what that would damage that would do to the brand. And one way that they can mitigate that is by coming out with a fleet. And they the reason why I get that idea is that they have an investment in Didi in China. That's the Uber of China.
Mm-hmm.
They own about 5% of that. But I think they can take some of their learnings there and apply it to a network.
You think the whole rideshare thing is done? You think it seems kind of quiet?
Yeah, I think those Uber and Lyft are going to see a nice rebound. Obviously, the comps are very easy for them. They earn those easy comps. It's been a rough year for them, and wish them the best. I think that I can see those stocks moving higher this year, but I think longer term, they got to make that transition to EV too, and I think it's going to be a crowded field.
Yeah, I mean, I'm not taking an Uber or a Lyft was, wow, that's what I'm doing. They're traveling. I'm not doing that. I go somewhere next trip I travel, I'll probably rent the car before I get in an Uber or take public transportation with this.
Well, exactly. How much of that is just concern about COVID,
It is.
And so I would assume once we get through COVID, some of those, old behaviors, going to the stadium, going to the office, taking an Uber, whatever,
I would just briefly interrupt here. And I know that it's not the core context, but we've got smart people on the panel, not including myself. Let me be clear. I'm not counting myself as a smart person here. What I am saying is that I would love to get the 3 of your opinions on, are we in a bubble right now? When I think about the move in tech, and I may have a concluding concept around it, but Jeff, this is your show. I want to be respectful, but ask permission to ask the other panel.
Of course, let's liven it up. Most definitely.
Just like maybe start with you, John. Do you think we're in a bubble? And I would define a bubble is that the market in the next 12 months will have a measurable downturn. Are we in a bubble or are we not in a bubble?
I would say we're not in a bubble. And that doesn't mean that I don't think there could be a downturn or a long flat spot for the next 6 months or so. But I mean, I think that people underestimate the power of the digital transformation. The kind of technologies that you and I are talking about and that Adam are talking about are generational changes. And I think that these companies will grow into their valuations and probably quicker than we expect.
Appreciate
But-
that.
Plus, I
Adam,
would also say it's hard to have a bubble pop when you have the Fed behind you. And
That's yeah.
the Fed is undefeated, and the Fed wants higher prices. It wants more inflation. It wants more economic growth, and so it's going to do everything it can to achieve those goals. And that may put off the bubble for a couple of years, perhaps, but certainly not. I'm not really looking for a pop in the next 12 months.
Yeah, I mean, I'll jump in. I'm
Yeah.
writing down the Fed and the pent up demand here. We definitely have a correction in our midst. Probably nothing more than the 5 to 10% type of thing, and that's very typical in the beginnings of post-election years. But think about how resilient and rebounding this market economy have been in the face of this pandemic. How much we've learned as a society to grow and live and transact. And then when all this pent up demand comes back in after, our Adam's saying, when COVID's gone, people are going to start going back to rideshare, amongst other things. They're going to go back to a lot of everything.
Mm-hmm.
So I don't think we've seen the expanse of this bubble yet. And, it doesn't have to, we had a pop. I mean, last year was a exogenous event that popped it. We've had our, .com bust in 2000. We had the housing bust in 08, 09. That's secular bear market bottom stuff. That's relates to the, oil embargo and Vietnam stuff back in the 70s. I think we're at the other side of that. We're just coming out into the new secular bull market that arguably started in, 2013, 2016, depending upon where you want to draw your lines, like the old 1982 moment. So little bubble, sure. Big bubble, I don't see it.
Yeah, I see what's happening right now is more ebb and flow. And it's just amazing. If you pull up a long-term chart of any of the indices, you can't even see 87. You can barely see 92. 2000. Okay, on the Nasdaq it's glaring, but on the S&P it's certainly not. Amazingly, even last March just kind of sort of fades into the rearview mirror. And so I think you do need to be sensitive to ebb and flow. And I will say my own portfolio has told me something about that. In the past 48 hours, 6 of my 34 names have all hit their targets. And as you know, I sell at least half a position when it hits my targets, all totally unrelated. Goldman, Bank America, Lumentum, Ballard Power, Cheniere, and Pioneer all hit their targets. And I've been selling. And I'm okay with that. Because, if you go back to like 2015, at least 3 times a year, every year, you get at least 3 pullbacks of 8 to 10%. They just happen. And so, I want to respect the fact that I have these targets. I've made money, I've sold, I've raised some cash. If we go down 6, 7, 8%, who knows why? Is it an impeachment thing? Is it because, the 10-year goes to 150? I don't know. But it's just sort of inevitable that eventually we'll get some sort of pullback and I'll have cash and I'll go back out there and put it to work. People are going to say, oh my gosh, is it over? No, it's not over. Digitization's powerful and markets trend higher because of population growth and innovation and productivity growth. So that's just fine. But to answer your question, and I know I'm sort of doing it in a long-winded way, Gene, I think you just have to be sensitive to ebbs and flows. And I think right now is a time to lighten up on names as they hit their targets.
And Gene, what's your opinion?
I'm on the view that it feels extended. I do agree with Adam that when you look back over the market in the last 10 years, actually it does not look extended. And it's just kind of, there's some blips on there. So I think in general, I think that the market is still positively biased. I feel strongly about owning tech, not just because I come from a tech background, but because all these themes we're talking about here is that you just want to own businesses where if there is a big pullback, that there is we talk about these undeniable truths, and undeniable truth that will effectively profit you over the long term. Amazon's a great example. Went from $3 to $90 over 2.5 years. and to 85, $3 to $85, and then it went down to $7 in a year and a half. And of course, today it's 3,100. So that's why I think that you want to be positioned. I'm not I just don't know it well enough to think about other places to have your money, whether there's a bounce around airlines, or to me, it's shuffling the chairs on the Titanic.
I can tell you that one of the best positions I've had in the past 10 years was one I completely forgot about. I was going to transfer some money out of a Fidelity account to a different brokerage, and I had forgotten that I had a 401k rollover from Microsoft. And
that's a great thing to forget about.
I know, right? So if you think about all the ups and downs that the stock has had over the past 15 years, and that all the many reasons there had been to sell it, but that was wrong. That was the wrong strategy. It reminds me of the fact that Fidelity once did a study to try to understand which of their customers had done the best over the years. And can you guess which ones did the best?
The ones that don't know anything.
The ones that were dead. They had forgotten about. They had the ones that hadn't changed their portfolios for 15 years.
Right.
So I mean, I don't recommend dying to prove that this is correct.
Okay,
but
I didn't know we were doing stand up.
Yeah.
Anyway.
Hey, let's just pause for a second and see if we can if anyone's got any questions out there in the audience. Is that Steven hosting us again?
Yeah, thanks guys. Great job so far. Ramona has asked, what are some digital disruptors in healthcare?
Well, Inovalon is the best one I know. That's the company that basically is creating this monster database. By the way, the ticker is INOV, Inovalon, creating this monster database, 58 billion medical events from 320 million patients, so that it can compare your baseline to the baseline of all these people. That's exciting. Health Catalyst is another. It's basically using data, HCAT, data and artificial intelligence to help hospitals lower their costs and save lives. Again, remember, the holy grail of healthcare is people living longer at lower costs for providers. So there are two for you, Inovalon and Health Catalyst.
John, Gene, you guys got anything in that area?
Yeah, I like a stock called Schrodinger's, and the symbol is SDGR. It's a company this is a company that was backed by D.E. Shaw and Bill Gates for many years. It just went public last year.
What are the letters? ST is in Tom?
No, SDGR. SDGR. It's Schrodinger's, like the cat. This is a company that's using AI to help pharmaceutical companies develop new drugs faster. And this is a tremendous area in which to explore. They've had a lot of success, and it went straight up, came back, and now it's progressing higher again. So it's one I think people should take a look at. SDGR. It's the Artificial Intelligence Development of Pharma.
Super. Any other questions out there, Steve?
Yeah, thanks. Do you have any opinions on NVIDIA versus AMD?
Anybody got a semiconductor graphics?
That sounds like a Gene Munster question to me.
It is. It was super close to NVIDIA. It was in our ETF. We had to sell it. It just got too big. We had some requirements around that versus AMD. I think the simple takeaway is I think both of those companies are well positioned. It's not a good answer, but I think they're both going to be successful, and not only just with their core businesses, but really powering a lot what's going to happen in AI.
What's fascinating about NVIDIA is that they've really digitized themselves. They've completely overhauled their business model. 15 years ago, we thought of them as a chip company, and they are still making chips, but they're really a software company that specializes in artificial intelligence, and in a way that really works rather than just pie in the sky.
NVIDIA is the biggest in the gaming, interfaces, correct?
It's known for its graphic
graphic
chips. Yes, exactly.
John's breaking up a little bit. He's frozen there. You're freezing up there, John. Let's see if we got another question.
Yeah, are there any upcoming IPOs that you're excited about?
One that I'm excited about is a firm. They're basically allow you to purchase things on a subscription basis, and their biggest customer is Peloton. And I think it's a generational view.
Hey.
Just that people want to buy things on a subscription, so a firm would be one of mine.
A firm like the racehorse?
That's a question for Adam, but it's AFFRIM, a firm.
AFF, but it's not trading yet, right?
Correct. It is
Okay.
not trading yet.
Can I give you one that is? Can I give you an IPO that came out in July? Actually, Gene, again, like this has got your name all over it. Jamf Holding, right? JAMF.
Yeah.
Yeah, it basically allows an enterprise, a company, to monitor people's Apple ecosystems, because most companies are Microsoft based, and so they can monitor everything. But this allows companies to bring an Apple guy on the platform. I haven't done any work on it, but I'm fascinated by it. What do you think, Gene? Actually, do you like that?
Yeah, I'm a fan. I've known the
John,
company
you
for
back?
years, and
I'm back.
they're going to be eventually this transition to Mac. People are going to want to be prepared to work from anywhere. Mac benefits from that because it's just easier to use. There's going to be kind of some upward pressure from people to have more Macs as part of company hardware, issued hardware, and Jamf benefits that. It's moving at the speed of a glacier, the shift for enterprise to go to Mac, but glaciers. I'm gonna go back to the time when glaciers would be expanding. When they do move, they move with a lot of force, and I think Jamf's going to benefit from it. I love that idea.
Oh, good.
I
Thank
got
you.
a quick question for you guys. I want to take another one, but I'm seeing this whole like Google Classroom, Google Docs thing, trying to do like the enterprise move into the public school system. And I'm not thrilled with it. I try to communicate with the kids, with this remote learning stuff now. And it's just, it seems really unstable. Any thoughts on that versus the Microsoft stuff that I'm, accustomed with and the Mac?
Unfortunately, I don't know.
I mean, it seems like they're making a play to grab the kids. It's almost like a tobacco company play to like suck the kids in early on and get them hooked into the Google, universe.
Yep. Makes sense. Don't know a lot about it.
All right, that one fell flat. Any other questions out there from the audience?
Yeah, do you have any thoughts on social media companies like Twitter or Facebook?
I got a lot of thoughts on them. First, I'll call this a bias check, and I'm looking at the clock here. We've got, I think, 30 seconds, less than that. I am negatively biased to them. I think social media is toxic, and I think that that's nice that I think that it's toxic, but that's not going to change anything. Is that people are going to continue to go down the rabbit hole and they just can't get out of it. And look at the engagement, the growth of Facebook has been just so powerful. And I think that as kind of a leader, a tech leader, I think Facebook's, it's going to get progressively more difficult because investors are going to wear on the multiple because of everything that we're going through right now and the impact to how they do business and what's allowed, what speech is allowed, what's not. That's just headache for investors, which is negative. So
I want to let you guys know, Gene, that you got more time because I think this is because it's the last one of the day. We can go a little bit, so you don't got to cut yourself short.
Sounds great. And I'll just finish up on Twitter. Is Trump's a big part of the engagement. I've seen varying numbers about how much usage is ultimately driven from what he's doing. But I think that Twitter is a powerful platform, but it's still in the same context that that regulators are going to try to figure out. Such a bizarre thing happened in the past week. There's been talk for 6 months about Washington regulating tech, and then here we have tech regulating Washington. And it just creates a lot of friction between the two. And I think as stocks, it's just hard to for me to imagine investors getting really optimistic. I'm going to give a quick nod to the other side of that, the contrarian, the view, the other view besides my view, is that these companies have been hammered in the past year because of ad dollars. Their growth rates have contracted significantly. Google's ad business, Facebook, and they're going to see a nice easy comps effectively this year. And so therefore, the bull case is that they're going to benefit as you're going to see acceleration in their revenue growth. I'm in the bearish category on those.
Adam, John, you got anything on social?
After you, John.
I mean, I still like Facebook, have, for many years. I think that I agree that there can be a toxic environment, but it's the de facto place where people keep all their photos and connect with all of their friends, and it's not going away. Their advertising has been a terrific business for them, and it's going to get a lot bigger. And I think that the negative vibe we're getting out of Washington about the social media stocks is only going to help them in the long run for investors. It's going to help them. It's going to help them because it keeps sentiment lower than it would otherwise be. And I also see Facebook moving into sales with its association with Shopify. I think that's going to be a much bigger business than people expect.
Good.
Yeah, and I did own Facebook. It hit my target, which was 235. Again, that was probably too low, but it's like 252 now. And I hope that Facebook gets broken up, because I would love to own just Instagram by itself. And I think there's a huge monetization opportunity there. And I'll just give you a quick example. Let's say Kim Kardashian, takes a picture of her shoes. Oh, I love my shoes. And then she posts it on Instagram. And then Instagram has a one-click to buy button in the newsfeed. By the way, MasterCard has created the software that allows you to do that. It's exactly the same as Amazon Prime. It's so clean. So, you're going, oh, wow, whoa, Kim Kardashian loves these shoes and I can buy them. And because you've already loaded in all your clothing sizes, your address, and your credit card, you go, boom. And then you say, yo, I just bought Kim Kardashian shoes. I think that is an exciting opportunity. I don't know if they're going to do it, but that's, I think, what Instagram was ultimately made for. And like I said, I hope that it gets broken up and I can buy Instagram, because I'll buy it for that reason.
I want to
You can say the same thing about Google and YouTube. I mean, YouTube was probably standalone worth $200 billion by itself.
Yeah. Steven, any other questions out there? I was wondering about LinkedIn, because we were talking about LinkedIn before, but I want to get to more from the crowd, if there's any other ones out there.
Yeah, are there any tech companies in emerging markets that you like?
I got plenty here in the States. I haven't really gone overseas so much.
Yeah, we've done work there. It hasn't gotten through our whole process. I'm not trying to kind of go halfway here, but I think there's some juicy opportunities outside of the U.S. Stay tuned to Loop.
Would you buy Alibaba, Gene?
Don't know it well enough to give you a good answer.
Okay, that's fair.
The one stock I'm looking at overseas, it's not in the emerging markets, but it's in Europe. It's called SAP. It's the largest technology company in Europe. It got whacked because
Small cap.
it had a bad outlook a few weeks ago, but that'll come back long and strong over the next 6 months. That's
Sure.
SAP.
And would it be fair to call that the Oracle of Europe, John?
I wouldn't put them down that way, but if I was being mean, yeah, I would say that.
I mean, I didn't say that the boss was like Larry Ellison, okay? I'm just saying the.
I know. I'm just joking.
Oh, John.
Okay.
Any more out there? Unless you want to shut it down. I mean, I'm liking these questions coming from the crowd.
Are there any SPACs that you guys are interested in?
Yeah, I bought LSAQ, which is Lifesci Acquisition 2 Corp. We don't know where they're going to buy. The thing priced at like, $10, as they all do. And it's, every now and then it pops up to 13 and it goes down to 10.85. And some days it only trades 25,000 shares. We don't know what they're going to buy, but it was a very talented team that came out of Think Equity. and they've got some great operators. The first one that they bought, LifeSci Acquisition One, priced at 10, and within 6 months it was trading high teens. So basically, just because they did it once, I'm giving them the benefit of the doubt that they'll do it again. So we'll see what they buy. Just keep that one small, because you can't do any analysis on it other than just look at the management. So LSAQ is my SPAC.
Keep them coming, Stephen, if there's more.
All right. Are there any 3D printing stocks that you recommend?
Not for me.
Next.
None for me.
All right. Any thoughts on hydrogen energy stocks like Plug?
Always love that.
Yeah, I
Always
sold
love
my Ballard today.
I'm looking for some things in that storage area. We were talking about this before, so I'm not sure we have a hydrogen economy just yet.
Any thoughts on NEO?
Yeah,
Don't
NEO's more expensive than Tesla. It's about an eighth the size of Tesla's market cap, and they do about a tenth of the volume that Tesla does. I think it's just better to own Tesla.
Thank you. Any insights on evolving battery technology?
I just saw a private one out there. I mean, I wish very interesting. I was telling the guys about it. It's called Storage and Technologies, and it's just a part of the development in at Stony Brook University. It's the Clean Energy Business Innovator Program. So they're doing something very. I just heard about it today. So you can't invest in it, but it's something worth watching. And I think that's a trend for the future. Part of that, my super boom forecast for this new technology that gives us all energy to power all the things that we use. So no stock there, but definitely an important area in my mind.
Well, I don't know, Gene. Maybe Tesla isn't a car company so much as a battery company.
Yeah, I think there's a strong case for that. Computer on wheels. And yes, they do use Panasonic batteries, but I think what they add on top of it is what really gives them their range. And so I'm always cautious when I think back to a earnings call a year and a half ago when an analyst asked Elon Musk what battery technology should they acquire, and Elon turned the question on him and said, "You tell me. We've looked at everything." So money at that point was not as much of a problem. They could have bought an upstart. So I think they got a pretty good pulse on it. Hard for me to call where the next big breakthrough in battery tech is.
I think we should wrap it up. It's almost 6:10. Is there any other one last question maybe that looks interesting out there, Stephen?
Thanks. We'll wrap it up with this. Do you have any thoughts on the 5G rollout, where we are in the cycle, and your favorite stock?
I was going to ask you guys about that too. Good question. Any 5G thoughts? Gene?
I do. I mean, I keep coming back to this. I think Apple's a great play on it. 5G right now is not what the carriers want you to believe it is. They talk about gigabyte speeds. That is misleading. What we've seen with 5G speeds is sub 100 megabytes, so it's 1/10 of where it needs to go. And we did a piece on this called the layered cake of 5G. So we'll get to the gigabyte speeds everywhere, but we're probably 3 years away from that. But eventually, as that happens, people are going to be upgrading their devices, and I think Apple is one way we've referred to as the best way to invest in 5G. And the nice thing is it creates a multi-year iPhone upgrade cycle. Typically, the upgrade cycles are a year, kind of boom and bust. But I think with 5G, this could be a 2-3 year type of an upgrade cycle.
Adam, John, you got one in 5G?
Well, Qualcomm was my 5G. I mean, like, I'm a broken record. It hit my target. But that's just fine, because there'll be a pullback somewhere along the way, and I always have a list. I keep it on the side of my desk, with my favorite names that I want to own on a pullback. And you can't buy pullbacks if you're 100% invested. So Yeah, I'll come back in on Qualcomm. They have more patents, I think, than anyone else. I mean, technically, there's some Chinese firms that may actually have more, but the value of Qualcomm's patents, according to Gartner anyway, are the highest in the world. You know, if you monetize those patents, so that would be.
No, I agree with Qualcomm. Qualcomm's been my favorite pick for 3G as well. I think the 3G 5G as a concept has been a little disappointing so far, but it's mostly because it hasn't been implemented fully yet. So I'm looking for opportunities for 5G to emerge over the next couple of years.
Is the problem with the actual wave itself that I understand it's the frequency, it makes it so it doesn't go through enough of the metal and rock and stuff that gets in the way of the stuff, or the lower frequency stuff penetrates the buildings and things that we all live in? Is that reality, or is that accurate at all? Anybody? Gene?
Yeah, it's tough to, that is the range, you get some just wild variations in the speed. Eventually coverage will get to be a point where that's not a factor.
You just got to put more antennas everywhere, right?
Exactly.
Okay. All right. I'm going to wrap it up there. You guys have been great. Appreciate the extra time. Great seeing you. Great meeting you, Gene. And thanks to Money Show and everybody out there for tuning in, and be well. Stay safe.
Thanks for hosting, Jeff.
Hey, way to go, Jeff. John.
Appreciate it. Thanks, guys.
Awesome.